Welcome everyone to this episode of the AskJasonGelios show. I want to be talking to you today about how to buy a house with bad credit. If your credit's not so stellar, but you still want to purchase a house and you're okay with a higher interest rate and a higher monthly payment, it is possible to purchase a home with poor credit. So let's go ahead and dive into this. So first off, what do mortgage lenders consider to be a bad credit score? Well, the general rule is anything at 620 or less is considered poor credit. I've seen, when I was a lender, I've seen people that had scores as low as 500. I think I've seen a 498 once. That was very low, okay? And it just didn't make sense to get a mortgage with that kind of score. However, it is possible, and I'll share with you why. So, first thing, can you buy a house with bad credit? Yes, you absolutely can. You have options. Now, first off, I want to mention that there are 3 credit reporting agencies, okay? You have 3 that calculate your scores, and lenders look at least mortgage lenders look at all 3. Maybe when you're getting an automobile loan, they'll pull 1 to get an idea, but mortgage lenders pull all 3 credit scores, at least they're supposed to. In my experience, they have, okay? So you have options. The loan options to buy a house with bad credit. You can start with your, what I like to call your vanilla loans, right? Your 30-year fixed, your conventional loans, your 15-year fixed. I remember at one point there was a 40-year fixed. I'm not sure if they still have that, but that's crazy outrageous. Anyway, the conventional loan, they look for at least a 620 score or higher. And that's many lenders. I don't want to say every lender, okay? Then you get into FHA, which an FHA loan is great for first-time buyers. It's a great option. They look for a little bit lesser score, which is great. They don't give you, they don't really hit you too much on the rate if your score is low, because they're also backed by the Federal Housing Administration. So they're very attractive because they have lower qualifying requirements. I believe they'll go down as low as a 500. However, they might up that down payment percentage. They might ask you for 10%. They might ask you for 15%. Just depends. But normally FHA actually requires a 3.5% down payment. But as your score is lesser, they may increase that down payment requirement. And that's many lenders. I'm not saying that's all lenders, but that's many lenders. Then we jump into the VA loan. So the VA loan, if you're a veteran or surviving spouse of a veteran or currently serving in the armed forces, you could qualify for this VA loan, which is backed by the Department of Veterans Affairs. This allows you to purchase a home with 0 money down, which is very attractive, and they give you a better rate. However, in most cases, you have to pay a one-time funding fee. And I believe it's 2 to 5% depending on your situation. Okay, so that could be an additional, payment that you're paying. Most likely that will be on your closing cost sheet. So that's just something to know. And they don't typically have a credit score minimum, although many lenders will actually look for about a 580 or higher. Okay. Then you have what's called a USDA loan, which is backed by a government department called the U.S. Department of Agriculture. I've had clients go through all these loans, and they're all great options, by the way. So, but a loan from the USDA allows you to buy a home in a qualifying rural area with a $0 down payment. Now, home has to be in a rural area. That's the only thing. But most lenders with the USDA loan will require about 640 credit score to qualify. There might be some other income requirements as well. So what options do you have if you can't get a mortgage? So let's say your credit is so bad and such disarray that you can't get what's called a bad credit mortgage. And by the way, those options, people with good credit go with those loan options that I just mentioned as well. I just shared with you some that are more forgiving, I guess. But the first one is increase your available credit. So increase how much available credit you have to get your scores up. Don't go out and get new credit and then max it out. Get new credit, maybe spend a little bit, pay it off on time, and that will increase your credit scores. Number 2, add new accounts. So adding new accounts means you'll be increasing your available credit and increasing your overall credit mix. So if you do this in what's called bulk, it puts everything in the same time frame. So if you get an unsecured loan, which is a loan that has no collateral, and then you get a credit card, or maybe you get a new car, you're adding new accounts, which is a nice variation for your credit score, and your scores will go up, provided you're paying these things on time. Number 3, pay off collections, pay off judgments, take care of stuff. That way they show paid on your credit report, which will really help your scores go up. 4, stay away from hard credit inquiries. I mentioned opening up new accounts and doing new things, right? However, don't go out and apply for a dozen credit cards or a dozen loans from different banks. Try to keep it down to like 1 to 3 inquiries and just get it done, okay? And then number 5 is finding a cosigner. Now, when you're finding a cosigner, you do want to find someone that has stronger credit than you. You want to make sure that they can help pull you up. And actually, when you're going to get a mortgage, if you have a cosigner, that will help you have a better chance of getting approved. But you find a cosigner, they can help you out, help out your credit. Just pay things on time and make sure that you're not screwing them over. I'm sorry, that's the term that I thought of, is make sure you're not screwing them over. Honor your word and pay things on time so that you don't hurt their credit. That's the only thing about a cosigner that I don't like, is that they're also on the hook as well if you don't pay. So the bottom line is, getting a home with bad credit is possible. I shared with you some loan options. I shared with you options to improve your situation. Just very basic things that you could do to change your credit scores ASAP. And credit reporting agencies report every 30 days. So if you do something in 1 month, make these changes that I mentioned, right? These 5 options. What will happen is you should see an improvement after that 30-day window. So I hope you guys found this valuable. Be sure to follow me on social media, and you know what? Share your thoughts in the comments below. Have you gotten a bad credit mortgage? That's okay. Admit that below. And if not, have you known somebody that has gotten a bad credit mortgage? And if you found this episode valuable, please share that in the comments. Otherwise, I'm Jason Gelios, Michigan Realtor, and I appreciate you watching.